Good morning, everyone. Welcome to the Flow Show, Monday, 16th of September. A big week awaits with the FOMC, the hot ticket on this week's trading calendar. That and the Bank of England, Norges as well. So we've got quite a few central banks, BOJ as well, South Africa Central Bank. So lots of central banks going on this week. Morning, Kay. You all ready to rock?
Good morning, Ryan. Good morning, everybody. We are ready to rock and roll, right? We are ready and willing, yeah.
Yep. Yeah. Well, we'll see if we're willing or not. Depending on what happens in markets. Right. We'll go over what's coming up and when later on in the show. Now we'll get through some of the headlines. Over in China, the PBOC says it's preparing to launch additional policies, and there's going to be new policies to lower corporate and household financing costs. This is all coming in amidst what we've previously spoken about, that they are potentially looking to ease rates, depending on what rates, RRR or some of the other ones as well. So we'll wait and see, but it looks like something is coming, most definitely. We did have a bit of China data out, which I will quickly get up because I've not had my calendar up and ready. So bear with me 1 second and we'll take a look at that. Where are we? There we go. Let's bring that down to there. Boom. Right. So we had some data over the weekend. Industrial production data, all coming in positive numbers, but all a bit softer than expectations and down on last month as well. As you can see there, industrial production 4.5% lower than last month. Retail sales coming in at 2.1% lower than last month, missing expectations. Unemployment rate, that's the only thing that did go up, but that is not good news, obviously, if that goes up higher, 5.3%. So still, I say, positive numbers, but looking like things might be getting weaker. So that just adds to the potential for the PBOC to do a bit more on easing. They had a holiday, as did Japan today, so things are a little bit quieter this morning out of Asia. Moving over to Japan, and one of the candidates to try and become new PM, Takaichi, says the time is not right for a Bank of Japan rate hike. So weighing into that argument, we can assume we're going to have other candidates waxing lyrical about what their thoughts are for the BOJ. But according to this guy, no idea anything about him. He says the time is not right for the BOJ to hike rates. A bit of data this morning, because we do have the SMB. Is the SMB this week? Is that one I've missed, Kay, or is it next week?
I think is it next week? Let me just quickly check. 26th, that's next week, right?
Yeah, cool. So we've had some PPI data out from those guys, which actually went up more than expected, 0.2%. Year on year was a negative, but not as much as expected. I don't think this data changes anything for them. What's the latest with the SMB, Kay? Are we expecting another cut?
Well, that's what the market would like to see, and what they already tried to trade. It's a bit of an open question for me, because you can cut, but then they are already at relatively low levels. So how much can they cut? There's all kinds of wild rumors or opinions going on, and notably by UBS, who thinks that they might cut. And UBS being the biggest Swiss bank, perhaps they are a bit closer to God than we are, and they know something that we don't. It's going to be, it's a bit of Bank of England type of case, but with markedly different interest rate levels, obviously. So yeah, for me, it's an open question. They may be tempted also because the Swiss franc has been really strengthening a lot, but I would still lean that they would, towards the fact that they would more do FX intervention or stealth intervention, as they've already been doing many times in the past. But I'm not sure whether they will really use the interest rates to put the Swiss franc lower. That would be. I haven't heard anything either from the Swiss corporates so far, because we know that over the turn of last year they were like really complaining a lot about the level of the Swiss franc, and but haven't heard too much about them unless I missed it. So I think it's maybe more a case of FX using FX than rather using the interest rates. But it is possible that they go another 25 bps.
Are they in a bit of a same situation as Japan, where everything's remained low? Even through the big inflation spike, didn't really take off in Switzerland. They've been in a country that's had pretty low inflation, pretty low interest rates. Would they want to have to cut that low, getting rates back towards zero? Given
That's what I'm always wondering as well, with interest rates at this at the level where they are, because that begs the question: do they want to keep at least some form of positive real rates, versus like cutting virtually to flat again, or even negative real rates? I mean, that's really a big question to ask. If they go cut, I think that would be like an extremely strong signal that they find the Swiss franc has done enough and should be weaker. So I mean, it's going to be a very interesting meeting coming up then, for those guys.
Yeah, thanks, mate. So that will keep us on our toes, no doubt. Right, moving on to the clowns at the ECB, and the wafflers are still coming out the woodwork all through last week and today. ECB's Lagarde was out saying they're determined to reach the inflation target and will look at the data for rate moves. Pretty much a lot of them all not committing to further further cuts, and when those might be. ECB's Reinach says that the path towards 2% inflation will be very bumpy. If the baseline holds, there will be a series of ECB cuts. ECB's McClough says not pre-committing to a particular rate path. ECB's De Guindos saying we don't have a predetermined path for rates. We expect a significant slowdown in the growth of labour costs next year. We want to keep all options open when it comes to interest rate decisions. And though we expect inflation to fall in September, there will be a rebound in Q4. ECB's Wunsch saying rates should fall, but is worried about further inflation. There was a bit of data out from the Eurozone, some Q2 data. I think it's final numbers, so probably not much to take to it, but it was on that labour costs year on year coming in at 4.7%, wages 4.5%, so lower than the last quarter. But as I say, I think these were final numbers, so not making much change to what we saw in the flash numbers, but still going the right way. And that's what De Guindos was talking about today as well. Back to Friday and the data over the US, which there wasn't an awful lot. Seen a bit of weakness in the price numbers. These price index data's coming in lower, import prices coming in lower, export prices coming in lower as well. So that adds to the disinflationary theme going on in the US as well, which is good news for the US, as long as it doesn't end up going too far. We had the Michigan numbers, which once again threw things up into the air. Headline numbers: consumer sentiment improving to 69. Current conditions also improving, expectations improving, and there was a bit of turnaround in the inflation expectations. 1 year dropping a pip, 5 year going up a pip. So pick the bones out of that one, all the market doves and the hawks. On the Fed, so after, or how we sit today, given we're coming into the Fed week, it's all a bit 50-50 at the moment, depending on what metrics you look at. Something like the OIS is showing a 51% chance versus 49 of a 25 pip cut. So 51% for 25, 49% for a 50. If you look at something like the CME, we're pretty much the other way, where 50 is now again the most favoured number, but it's all pretty close together. So it's really become a bit of a coin toss. Some press over the weekend were also adding to that and making cases for 50 pip hikes. I know James in our room mentioned an FT piece saying that chances are growing for a 50 pip cut. There was a similar piece from the Wall Street Journal and their chief economist, though if you actually read the story, he made more of a case for a 25 pip cut while pumping a 50 in his explanation. So go figure about that. Some of the bank expectations are dropping out. Credit Agricole expects a 25 pip cut and for the dollar to rebound this week. JP Morgan still sticking to its 50 basis point cut. Gold is still sticking to their 25 pip cut and saying that they'll cut this week, November and December. So it's all a bit moot at the moment now, I think, Kay. You know, we're 2 days away from the decision. The market can jump around what it likes. It's really down to what happens now, isn't it?
Yeah, we're in this build up to quite a big meeting, because the difference between 25 and 50, and especially the message that comes with it, will be quite important, right? I'm like the market, torn. I don't know. This lines in what Powell says that could mean that they will front load and go for a 50 right now, which the market is clearly pushing for now. Because we are probably going into the meeting at least today and tomorrow, perhaps for a part as well, into peak dollar bearishness. I will say, going into this meeting, trying to push for that 50 BPs. But if you go through all the data, a cut is done, but it doesn't show the 25 or 50. But the line about Powell saying that they won't tolerate more labor market weakness is clearly one that leaves the door for the 50 BPs open, but the market in a more medium term is now pricing a lot. You know, I mean, they're already at what is it, 250 basis points or so over the next 2 years, which is bringing us actually right down to the or actually it's less than 2 years, I've seen today, brings us right down to the lower end of what would be expected at the end of the whole cycle. That still shows us how hard the pendulum swings in the market. I think it's a bit overdone, perhaps. I think we are close to peak dollar bearishness ahead of the meeting, and then we will see. But yeah, I mean, about the decision, we were saying like everything points to a 25, apart from the rhetoric and what Powell told us since Jackson Hole and even a little bit before. So yeah, it's still it's up in the air. And as we see this market, if they only go 25, there's going to be need for a bit of a repricing. And probably the dollar will shoot up 1% or 2%, and then thinking about stuff like the yen and perhaps the euro as well, you know, because after all, ECB cut, and the euro may all of a sudden be a bit weaker as well. But yeah, let's see what they come up with, because it's really a bit of a toss the coin here.
Yeah, and it's funny how things still keep changing. Because last week it seemed like the market was done with the 50s and 25s was the base case, and now here we are again, doing it all over again, playing this game. Is it, I think, a communication win for Powell, because he's allowed the market to keep playing between 25 and 50, which, as we said about financial conditions, can do half the job for them. He's never shut the door on a 50. So he's sort of got the best of both worlds, despite being between a rock and a hard place on whether he does one or the other. He's still got the best of both worlds in the communications, because he's not going to shut the door on a 50, no matter what they cut by this week.
I think it is. I think, yeah, it is. Winning the communication battle or so is perhaps a big word, but I think yeah, they probably made up their mind by now, the one and the other, what they are going to do. But indeed, I don't think he's going to shut the door on a 50 if they only do 25 in the next meeting. It's going to be probably extremely closely watching the labor market data, because inflation is doing sort of what we think it would do. Yeah, he done it, but I think that then the communication is going to be as important as the actions that they do now, because the market will want to see if what they price for the more medium term is correct or not. And there he has the power to, in the press conference, to say like, well, you guys are pricing too much, or go ahead. I mean, this is correct. But where we are now is a scenario where he is supposed to communicate that, yes, they will cut, not necessarily by 50 this time, but they will cut potentially in bigger chunks going forward. That is where the market is at now. So what is the surprise trade is what we are going to have to wonder about, right? What is the surprise trade, or is, yeah, the surprise trade is clearly that he would not say or anything, or he would tell the market, no, you're pricing too much. But on the other hand, if he gives the market what it wants, and not even at 50 this time, but keeping the door wide open for a 50 on the next meeting, because then we will have more jobs data, that will probably keep the market in the stance where it is now. And is he going to communicate this side? Perhaps, yeah. I can see it happen.
Yeah, I think, for me, looking at this, I think if we get a 25, it's going to be a pretty dovish 25. If we get a 50, it's going to be a less dovish 50, unless they are seeing some worries that no one is expecting. But I think that my base case is still a 25, and taking the 50s out of it, I think if it's a 25, there's going to be an indication that it's going to be a series of 25s. So potentially a 25 at each meeting moving forward into 2024 before they get a pause. So we may get, maybe 100 pips of cuts into the spring, something like that. And then they see where things are. So that's my base case. 25s, but a series of 25s, I think. But it's always the way. If they go 25, half the market won't be happy. All the doves will be saying they should have done more. If they go at 50, half the market will go, well, what do they know that we don't? So that's the rock and hard place for them. But our opinions get less and less important as we get to Wednesday, because then we just come down to whatever they do, and we will react to whatever they do as well, and make sure we're planning that we know what we're going to trade and how we're going to trade it. Bit of politics. Obviously, we had this Trump stuff again, this shooting business while he was golfing. So that raises questions for the security services over there. Obviously, it's a bad situation to be in. We're having to put up with all this sort of stuff around the election, but politicians don't make it easy on themselves, do they? We've had Dutch PM Schoof, if I'll get that right, Schoof, saying that he's going to ask to opt out of the EU migration policy next week. This is still a theme that's running through politics in Europe. We heard of Germany temporarily shutting their borders to immigrants, or their land borders, putting further controls on their land borders last week. And now the Dutch PM, who has their country's moved to the right side, now they're opting out of the EU migration policy. So policies are good until you don't like it, and then you want out of it. One person I have missed is ECB's Casimir, who popped up just as we were speaking. He says there's still more risk inflation will exceed the outlook. Rate cuts aren't a magic fix for the economy. September was the right decision, and there's no rush beyond. He says the next move must almost surely wait until December. So kicking the can there on a potential quick hike after the last one, pushing it to December. Right, let's have a quick look at what's coming up this week. As mentioned, we've got those central banks, but today we get the Empire State Manufacturing Index for September. That kicks off all the manufacturing data, PMIs and whatnot for this month. So we'll keep an eye on that. It's been a bit wobbly of late, this number, so it's not been the bellwether that it usually is. Big numbers tomorrow. Canada CPI data. It seems that Macklem's on the path to cutting whatever this data will show anyway, but we'll keep an eye on it nonetheless. Retail sales, that's going to get the market all jumpy with those last minute expectations for 50s and 25s. Tomorrow, industrial production as well coming out. Then on Wednesday, we get UK CPI ahead of Thursday's Bank of England announcement. Low expectations for a policy move on Thursday from the BOE. So it's really going to be about the vote numbers showing whether they were close to, or they are close to another cut, or whether they are still going to keep in pause mode. So CPI and PPI data tomorrow. Then we get Eurozone CPI data. I think this must be a flash number. I'll have to double check. I should do this stuff in advance. Is it the flash number? No. Is it K? I can't work out if it's a flash or not. I'll have to check it out.
I'm sorry. I was just no. Is it still a? Is it a September number?
No, it's the August number, so it's the final,
there you
isn't
go.
it?
Must be the final.
Yeah, final number. Okay, so we'll skip over that one. And then obviously Wednesday night, it's the FOMC and everything that entails. Thursday, we get some jobs data from Australia. So that's going to play into RBA's thinking. It's not on this calendar, but we do have the Norges in the morning there as well. Any expectations for those guys?
No, not personally. I'm going to have a look into what the Norges Bank can do or say. You know, they were on the last one. I think they said kind of done for this year, but well, we never know. We never know.
Yeah, no worries. And also Thursday we got the SARB. Anything for those?
Well, they I think could cut. They I think could cut for perhaps just a 25 or so, because that was kind of expectations of a few people close to them. So I think they may cut at 25 BPs. They're still above 8%, so there's plenty of room. Rand is doing all right right now. Yeah, and to support that new government, they could do with a little cut there just to show a bit of goodwill. Also, they are close to the Fed, so in copy they like to bit copy paste what the Fed is doing as well. So there is a fair chance that they cut this week.
Yeah, thanks, mate. Thursday, we then get some. We get the Philly Fed Manufacturing Index. That's the second number after the Empire State, and then we also get some housing data, existing home sales. On Wednesday, we do get starts and permits too, so we get a bit of housing data rolling in. Then on Friday, we get Japan CPI coming mere hours before the Bank of Japan announcement. Again, low expectations for any rate moves there. But it's obviously going to be about the future communications to see what comes from those. One thing that's been putting strings in my mind, Kate, was that Tamura last week saying that maybe they need to be careful of being too cautious about market stability and being too slow and that not having the effect. Do you think that's something that UADA may touch upon just to keep the ball rolling, but maybe a bit quicker?
Ueda has been surprisingly hawkish over the past couple of months. Huh? He went from the cautious hiker to actually telling the government, well, you guys sort it out, your funding and stuff, but we are still on the path, you know. That was kind of his message, and tomorrow may be close to him. I personally think they don't change this month because they most of them, and they do have this LDP vote, and I don't know whether it will be taken well if they do something this month. We've also seen some mixed CPI data, some sticky, other ones coming down. So I don't think they will do anything, but I think the Ueda's press conference is going to be important because he was more hawkish than he was before the past couple of months, weeks, and yeah, there may be still a bit of a hawkish message in there. That is at least what the market is also trading right now, because we've seen that a lot of positions have been increased for long yens over the past weeks. So the market thinks that they will remain a pretty hawkish path for now.
Yeah, I think it might be a case they've got to keep the momentum going in the rhetoric more than the actual policy moves.
Yeah,
perhaps.
because okay, there's opinions. Well, there's opinion. Of course, everybody has opinions on everything all the time, but it's a really small minority, sorry, that thinks that they would do one now, because they did the 15 BPs last time. And the next meeting is, let me just quickly pick
October.
Yes, so they do one. They do have one with projections and everything at the end of October. So that may be the next one, because there's really the opinions are divided between could they go again in October, or are they going to wait December or the new year? Because I mean, there's quite a few people think that they won't do anything anymore this year, but I think that's a very premature in thinking that they are not going to do anything anymore this year. I think they might actually, in the October meeting, could be the one to where they push the button again.
Yeah, very much. And what do you think they'll go? Do you think they'll go another 15, or could they ramp it up to 25?
No, they will not up it to 25, I think. I don't think it's in the well, I mean, that's my opinion at least. I don't think that the Bank of Japan is really going to ramp 25s, because whether it's they're doing or not, I mean, and I don't think it was that big drop in dollar yen. That's like really a coming together of a lot of circumstances at the same time. But I don't think that they will want to create the same environment anymore, because if they do 25 and the yen has again this kind of very, very rapid and nearly uncontrolled move, I don't think they want to risk it. So I know I don't see 25s in there. No.
Yeah, I'm of the same thought.
Maybe even only 10, you know?
Would it be a 10 or a 15?
Yeah, maybe a tenner. And do a tenner brings you up to what, 35 BPs or so, and then you keep the door open for a 15 to bring it to 0.5% on the meeting after also.
Yeah, yeah. And yeah, I wonder how the market will take that after doing the 15. But anyway, that's more for October. We'll get through what they say at this one first. As you can see in the middle there, we also have the China loan prime rate decision. So that might be somewhere, as we've been talking about, they decide to do something on rates. UK retail sales, it's going to be a wishy-washy number. I'll have to check what the weather was like. It was a pretty good August, all in all. So we may see a bit of a bounce in sales. I think did we have a negative one last month? We had a positive one last month.
It was lower,
positive. They weren't saying it was positive. I'll have to look. I don't trust this calendar. We'll check it out anyway. But it's up. Retail sales are up and down. If you get a good strong one, usually the next month you get a weak one, and vice versa. The only importance this will have will be just to react to whatever we've had from the Bank of England, the prior meeting from that announcement. So anyway, it'll be what it'll be. And then public sector finances, that might be one for UK budget watchers to see how the new government is performing with finances, being in power for just over a month and a half or whatnot, nearly 2 months. So we'll get to see that. Canada retail sales later on Friday afternoon. That's probably going to be the highlight of Friday. And then, yes, it's the weekend once again, but long way to go until that. So that's all the data coming up next week anyway. Right, let's see what's going on in prices. And once again, I'll sit down in the morning with another different figure on dollar yen. This one, no let up. Still on the downside. The moves still seem to be, or still having a big influence for yields. Yields finding a little bit of a base down at the 355s compared to what we got last week, or when we had all the data, we went lower, but now we're sort of holding around this 354, 55 area. So we're not seeing the moves slowing yet in these bond yields, and I think there's probably it might be a bit limited how much more we can do ahead of the Fed, and obviously depending on what they say after. If they're very dovish, then I expect these yields in 2 years to continue coming down lower, but I think we're going to start slowing up because down at 350, 325s, that sort of area, you're looking at 175, 200 pip discount to where Fed rates are now. We're getting down towards a more neutral level of where rates might settle for the Fed. So, downside will, I think, become limited if we get under 350. But we'll see what happens with the Fed and whatnot. But in the meanwhile, Kay, what's it going to take for dollar yen to stop dropping?
Well, first of all, the 25 BPs by the Fed. That is going to scare just the latest ones in the game. We are coming into interesting levels there. If you take the low, but I mean, yeah, I took that low first as well. You're the same one, which brings it to 130. The 38.2 is around 139 and a quarter. But if you take the pandemic low, the same level, the same fib is around 138 3/4, and I think that's going to be a pretty important zone there. Yeah, people are pushing their positions, and it's still the weak side. But I think, and again, that's what I said. I think, and I think I said it last week as well. I think we are going to go in peak dollar bearishness into the FOMC. And then we see if the market is right or at least short-term wrong. And the yen is going to be your barometer, right? Because that's going to be potentially pretty violent. If they only do 25 and Powell says, "Hey guys, I mean, don't push it too fast." I mean, because the labor market is still not completely falling out of bed. We will have to look at the next numbers. Then you can see a nasty spike there. Why not back up to 144s? That we were there last week. But if the Fed goes 50, then we're probably going to see a real test of that 138 3/4.
Yeah, no, I agree with that. I think if we do get a bounce on a 25 or less dovish Fed, then I think it could be quite violent. 144s, 145s even. Who knows? There's still a lot of volatility in this one. Still sitting above 13% in the 1 month vols. Tech-wise, you still got to be very careful because we're carving through levels. These flows don't care about covered lines on a chart. But if you've got to pick your places, 138 is going to be a real doozy of a level. It was a big level, big support and resistance level when we came up. So that's going to be one. It's a bit like the 152, a bit like your 147s, those sort of levels. So keep an eye on that if we move down. If we hit that over the FOMC and we fail to get through it, then maybe that's a place to have a look at longs if we're down there. But as you say, top side, you know, if the market wants to bounce a bit, it could be quite violent. So I'd be careful if we get in that situation, selling rallies maybe for a couple of days, just let things settle down again and start picking your top side levels as well. Euro dollar, that's having a little bit of a creep higher. It's come down to shorter term. So we're messing around trying to get through 111. We are through 111 now, so look for a bit of support to come in there. We're up close to testing this short-term level, 111.30s. Above that, we've got 111.50s. So we've had prior short-term action around there. So that's the two areas I'm looking at. If we're back above either of these, then it's really breaking this downtrend that we've had since that 112 test and hold. So above there, then we may be looking at another move towards that level. But again, watch where we are into the Fed. If we're trading 111.80s, 90s, and you've been looking at this level for a short, be very careful, right close to the FOMC. I would be looking at it again for a short because it's still a pretty solid level. Let's go into that and you can see it in more detail. But, you know, not this close to the Fed. You've got to be careful with levels like this. If we do see a move above there, then we've got that 61.8 fib, that all-important 1275 level. And then if we're above there, then we're getting into some really big, huge multi-year levels. I put 115, which is a real monster of a level. So let's see what we do. We could come through this week, and if we're still in that range, 112 is still a ceiling. That's going to probably give me a bit of conviction to give that another go, and then see where we want to trade between and in around that range. Gold I'll look at quickly because I know K-Man will want to touch on this as he's still in it. For me, the only thing I want to say is that we still don't really know where the levels are going to be. Okay, we're getting some levels developing. You know, this 25.63s, that's shown where support's going to be. We've got these other intermediate levels that are starting to show up. Maybe we've got a bit of a top forming at 25.89. This is all still short-term stuff. So you're going to need to, you know, let things develop for a bit longer before you start piling in and picking a direction. Everyone wants a dip, and those who don't want a dip are trying to guess the top. So this is a dangerous game at the moment. So you need to let this play out for a bit longer. Stocks going to be interesting as well. Obviously, over the FOMC, we are creeping back up towards those highs, which makes it very interesting because I'm still of a mind to play this from the short side up into this area. And again, if we come through everything this week and we've tested and we've held that area up there over the Fed, then I'm going to be more confident of trying to short in there. But I'll also still be looking for a reversal to a longs if we do break it, depending on why we break it. So I think there's a lot of key levels around in various pairs and assets that could be makers or breakers for the Fed this week. I'm not even going to bother looking at euro sterling. I was moaning about this one this morning. It's this flag might take another 8 years to develop for those who like to trade flags and stuff. But we're just really going sideways on that, and I don't see any reason why we break it. The only thing we might get for this one, if you're trading it, is the speed difference. If we get a big move in the dollar, we'll probably see the volatility difference between cable and euro dollar showing up. So if it's dollar weakness and we're seeing cable rallying, it's likely to go faster than euro dollar, in which case we could see a bit of downside pressure on euro sterling. I'm interested in buying it down at the 84 level if that's the reason why we're moving. Conversely, on the other side, if we're seeing dollar strength, then cable will still move quicker than euro dollar likely. So then we'll see maybe an upside move. So if you are trading this one, just look at what the dollar's doing in terms of speed between cable and euro dollar.
Until the bank.
Yeah, obviously we've got the Bank of England as well, which again might give me a little bit of a nibble at 84s if they're not dovish at all. Kate, I'm going to bounce it over to you, mate. If you've got any bits and bobs to set us up for the week.
Yeah, I'm just gonna take Ali's. Good morning, Ali, and everybody. Just going to take Ali's question on the cable there quickly. Okay, you can follow this move. Yeah, it has the potential to, because the market loves to sell dollars at the start of this week. So, but I'd be a bit careful, here around 132.10, 15-ish. Got a bit of a trend line coming in around the same level is the 78.6 of the move lower. What I would highlight though, going into this week is the very good hold that we had in the low 130s. So that to me, if you look at the overall move here, that to me is still very positive, regardless of what this wedge was doing. Still very positive. Had a test of the mid 131s here, came down a little bit, profit taking, and then we are shooting through here this morning. So the whole picture is still looking quite positive. But I'd say, yeah, here 10, 15, and then you have the prior high 40, and then obviously the one above. Do we have the power to go above there? Yeah, sterling is again doing really well on the cross side, and so okay, euro sterling is a bit lower, but if you look at stuff that I like to look at as well, is that you could look at this one as well, which is a sterling cat, which is getting back towards the top end of this channel, and it's really acting very supportive. So there's obviously two things going on here: positive risk, because the sterling is still a risk currency, and McLem remaining on the defensive rate wise, but it does testify of relative strength in the sterling as well. If you look at, because you could compare it a little bit one to each other, but I think this is one of those pairs that testifies about sterling strength as well. Okay, not only the Canadian dollar weakness. Canada is actually weak versus quite a few currencies now, euro included as well. Now, yeah, euro dollar, we are short term, we are testing the top end of the flag here. As I said, markets wants to go into the FOMC peak dollar bearishness, so we could push through when the States arrive. This is all very possible here. Mid 111s and then high 111s. Obviously, I would think that if we see that spike here, it's probably ahead of the FOMC, probably going to be enough. Okay, I just want to show on the dollar in the longer term this time. So this is the COVID low, March 2020, and the high. I've got the 38.2 of that one, around 138.75. If you take the next one, is more like 139.25. So keep those two levels in mind, perhaps. But what I did find interesting is that we open below the weekly cloud. You see that in those shots lower that we saw even in 2022, and then earlier, and then in 2023, we never closed below the cloud. If you see here, the weekly cloud that is, and we know the Japanese are watching their clouds. We do open quite a bit below this week, and it's a rising one. So it could create a little bit of a vacuum if all of a sudden we trade higher. But I would say we've got Bank of Japan, we've got the Fed this week. This is one at the end of the week. You want to see where it is, and so we've got really decent levels right below here, and we got this cloud which this week is at 141.30. Around is the bottom end of the cloud. Okay, 131, 141.30, and look, those levels here, 141.60, 70, they are also relatively important. So you've got your little bit of your initial range here showing up, I would say, for the dollar yen. So there's about 250 pips range. We have seen dollar yen can do 250 pips in a day. Okay, so that I would take as my initial barometer for the start of this week in the yen. Aussie. Whoops. That's not what I wanted to do. Yeah, the Aussie. Last week I was watching this. Is it going to go? Is it not going to go? And it was a bit too hesitant for me, so I decided to take my lungs off. It's true now. We are through this bit of resistance here. Call it 67 up to 67.15, 25, 20, and we are going through. So that's positive risk. Yeah, copper is not doing much this morning, but mainly positive risk. Dollar selling, okay. Aussie is doing fine. And look at now we are starting to build support. 67.10, 67, the figure is your first support here. If this continues, I do think we have a possibility to get up to 60, perhaps 80. But then we need to get back to our more medium-term picture. And still bear in mind, if ever the Fed does something spectacular or so, bear in mind 68 figure a quarter this week, okay? 68 figure a quarter, big zone in the Aussie dollar, all right? We've tried it and failed last time, and we had a pretty big setback, if you see that. We had a nearly 200 points, which is a 3% setback, which is not nothing, okay? And now we are trying to get back up there, all right? So that is one that I'm watching. Gold and silver. Well, I mean, it's bid. You can't say anything else. I thought we'd stop somewhere around this 25.65. We did around the end of the week, but then we opened and we're 20 bucks higher. So we are still in a very big scenario. But same thing as Ryan was saying earlier. I would want to now. By the way, I took another slice of this morning as well in gold and silver. Just banking what I have on my lungs for now, and well, part of my lungs for now. I'm still quite a bit long, but now I want to see this 25.5, 25.65 start to show up for a starter. Okay, we know where the bigger levels are, 25, 25.35, and then below here, of course, but that's now a while away. But I first want to see now if 25.65 and 25.5 start to show up. If after every, let's say that they only do 25 Fed, and we come back to 25.5 and hold, because I don't think that gold is only reflecting the weak dollar, okay? It's reflecting other things as well. We've got a global interest rates environment, barring the yen, which is looking down. And we still have geopolitics at play as well, right? So this and other stuff like fiscal and whatever you want to look at. It's still a pretty bullish scenario for gold, in my opinion. But we need to see some levels starting to pop up now, because it's a bit tough to start trading a one-way ticket. Okay. If the Fed does 50, I think 2600 is this 26.5 is going to look us straight into the eyes in this week. But first of all, one step at a time. Let's see if we already hold this 25.65 and 25.5. And silver is doing a bit the same, breaking resistances. Broke through now this 30 figure a quarter. There's a little more coming up, just above 31, 31.5. And then up around the high 31s. Okay, same thing here. Took a slice off this morning. I'll be waiting. This is still telling me that the market is not real. Is still softlandish, in a softlandish scenario, because silver is doing well, and as we know, silver is going to do well if the expectations for an economic downturn are not too big. Okay, so this is still telling me that we are in a relatively positive scenario, aside from lower yields. And so it's not only the lower yields play. Watch this very closely, because on it's a while away now, but obviously the Fed will direct this. But watch those indicators. Perhaps not that much. The New York bias number is not usually a huge one, but it's an early indicator. But watch those economic indicators, okay? If we start to see a downturn, a real downturn, it may be not as good to be long silver than gold, for instance. But we're monitoring for the time being. This is still looking relatively positive as well. I've let some go. If we get back down to low 30s, I may start to leg in, and especially around 29.5. I think that's it for today, Ryan. Back over to you, mate.
Yep, thank you very much, mate. That's definitely got us set up for the week. Everyone's set up for the week. So, hope you have a good week's trading, folks. Don't step on any landmines. Please be safe. Thank you, Kay. Thanks for coming to the Flow Show, and we'll update everything tomorrow. Have a good one, all.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.